On today's hot sheet, I'm discussing Zillow's latest market report for sale by owner myths. Weekly unemployment today is Thursday, November 21st, 2024. I am trying to be Byron Lazine, but I'm Tre Serrano, and the hot sheet starts now. Industry's only live daily show on the internet, brought to you exclusively by BAM. The hot sheet covers what you need to know about the real estate industry in a 24-hour time period. Today is a massive source of information for top producers here watching the show. Let me know where you're from, top producers. We are getting into how more people are hiring real estate agents more than ever, and of course, the data to back it. Let me know where you're tuning in from. This is my fourth time on the hot sheet. I absolutely love it here. Thank you for letting me be here. For access to the show notes, the charts, the slides that we'll be reviewing today and every day, sign up for BAMX. If you're not part of our community, this is an incredible community, nothing but value. And you get access to all of the daily downloads, courses, biweekly masterminds, the BAMX community, and of course, use code TREY for 15% off your subscription. The link is in the description. Tre is spelled T-R-E. Awesome. So let's go right into it, and I will bring up the comments as you guys start coming in. Here we go. Let's see. Kristen, San Antonio's greatest realtor. Brad, good morning. And good morning, Alicia. Justin, awesome. Thank you for that. Long Island, New York. Love it. All right, so we're going to get into a lot of data that we're going to talk about on today's show. A lot of really good data. I mean, Zillow's not always known for getting good data out for realtors, but they are just a very heavy data company. And so Zillow's October housing market report reveals easing competition as mortgage rates climb back towards 7% and investor inventory recovers in key regions like Texas and Florida. Buyers markets are emerging nationwide with 13 major metros, which we're going to go over which metros, including Pittsburgh, Louisville, and flavoring buyers in negotiations. Now, I know we've all been in very different type markets depending on where you are in the U.S., but I would say that even major cities now are getting a lot of inventory and the rates are affecting affordability. With all of the slowdown in the building, this is really creating pretty unique dynamic that all of us should be watching. So right now, competition and market dynamics. So the buyers are leveraging what's happening. So Zillow's market heat index indicates a balanced market edging towards a buyer's market as competition decreases, which we kind of already knew. So thank you for pulling up the report. So if you look at the gray, that's the neutral market, and the yellow is a seller's market, and the orange is going to be a strong seller's market. So we're kind of over, back in 2020, 2021, creeping into 2022, we saw a very strong seller's market. But, obviously with the rate hike, that really, really changed. And then there was some positivity in 2023, which became a little more neutral, and then back up in the early 2024, and then down. And then now in 2025 is really the big question mark, because this is where you have a lot of opportunities for buyers. You have inventory sitting, and if the rates come down, there's going to be a lot of transactional volume, in my opinion. So this is going to be quite the market to do that. So let's see. Seasonal cooling and recovery inventory from pandemic low contribute to the easy market. Regional trends, southern states like Texas, that's where I am, Florida, New Orleans experienced significant inventory recovery shift competition in favor of buyer. Pittsburgh, Louisville, Indianapolis, Nashville, and Atlanta are among major metros now favoring buyers. This was a very tight market in those cities, and now the inventory is relaxing a little bit, favoring buyers. This is also pretty big content if you're in these major cities to start pushing out this data. So, home values and mortgage payments. National home values, typically U.S. home valued at 360,385. Home values fell in 47 major metro areas. Home values climbed in just one metro, New York City, and at a 0.1%. Metros with the largest monthly drops in home values: Austin. Shout out to my boy Jeremy Knight, who hosted the hot sheet yesterday. Definitely not as handsome as me, but he tries. Number two is going to be Tampa at 0.07, dropping in home value. The third, my home, San Antonio, 0.7. Dallas at 0.7. Atlanta at 0.7. Honestly, I think this data is a little bit off, where I think the home values in San Antonio actually dropped more depending on the areas. Annual home value trends, metros where you have year-over-year price gains were the highest. You have San Jose, which was a very affordable city in California, is 7.1%. New York City at 7%. That's year-over-year gains. And Hartford, Connecticut, 7%. Metros where year-over-year price drops were the largest. Austin again at minus 3.5%. New Orleans at negative 3.2%. And of course, San Antonio at negative 2.5%. So let's go into mortgage payments. So typically a mortgage payment at $1,802, which is 20% down. Monthly payments rose 2.8% from September, but are $179 lower than October 23. I love shooting content. And I think this is an excellent thing, because I'm sure people are like, damn it, the rates went back up, and now I kind of missed the boat, and now I'm just going to wait. Well, if you show them this data, that it's actually it's the 173 lower than October of 2023, which hopefully will get people off the fence. Payments increased by 102.9 since the pandemic levels. That's a lot. But are you also paying a lot less for the home? If you want to know more about builders lowering the rates, watch the hot sheet I hosted on Tuesday. We did a very, very big deep dive into builder stats and how they're buying bulk loans, inventory levels. That's a good hot sheet to watch. Okay, so let's go into inventory and listings. So new listings are down 1.6% month over month, but up 2% year over year. New listings remain 17.7% lower than pre-pandemic levels. Have you had sellers say they'll wait till after the elections or after the holidays? I definitely think that those people that are waiting, if you just look back a year ago, where the inventory was, where prices were, it's a much closer part of the market to positivity or potential rate cuts. 10-year hopefully going down. Hopefully this will be its last rise up past the 4.4% that we see now, which we'll check out where it is today a little later. So total inventory slight month over month decline at a negative 0.05, but 18.5 higher year over year. Inventory remains 27.9 below pre-pandemic levels despite recovery progress. Price cuts 24.8 of October. New listings saw price cuts similar to last year. Sales activity and market speed. So newly pending sales rose 0.6% month over month and 7.8% year over year. I think that people are starting to have more confidence in the market now that they're following the Feds and following all the rate cuts that are happening, because now they are finally starting to have that. So you should see more transactional volume coming up. This could be part of the pent-up demand. Days to pending, so median time to pending 23 days, up 2 days from September and 7 days from October 2023. Rental market trends. So asking rents fell 0.2% month over month, but remained 3.3% higher year over year. I definitely think this is market specific, because if you're in a market where it has higher inventory levels, you should have lower rents, because a lot of people are let me know if this is happening in your market. But higher inventory market, usually the rents are lower because there's more availability. Plus you have multifamily and all the things. So the largest monthly drops, So I said it. San Antonio at a minus 1.1, Denver at a minus 1.1, and Austin at a -1. Uh, must be from homes sitting on the market. And, they ended up just renting it or taking it off the market. Yeah. Annual rent growth. So the highest year-over-year increase in annual rent growth is Hartford at 7.2%, Cleveland at 7%, Louisville at 6.4%. Okay, so the heat market index. This is really cool. Not Zillow, but the heat market index that we're about to show. Neutral market nationwide is a strong seller's market. It's going to be number one, Hartford. Hartford has a very strong seller's market right now. Number two is San Jose. Number three, Buffalo. I'm assuming New York. And then four, New York, the state. And then, or I guess city, that would make sense. Five would be Boston. And the strongest buyer's market, the biggest opportunity, or according to this heat map, number one is going to be New Orleans. Number two is going to be Miami, which is traditionally a lower inventory city, from my understanding. Number three, Jacksonville. Number four, Memphis. And number five, strongest buyer's market is Tampa. Yes, that's really cool map. I love that. Okay, so we're going to get into the for sale by owner myths and most profitable ways to sell according to buyers and sellers. So new research from Clever Real Estate reveals 67% of recent home sellers prefer traditional agents, citing higher sale prices and ease of use despite rising alternative methods like iBuyers and cash buyers. And nearly half, 46%, of home sellers mistakenly believe selling by FSBO is the most profitable option. So, general real estate trends, over the 2/3 of recent home sellers, 67% prefer traditional real estate agents, despite the rise of alternative selling methods like iBuyers and cash buyer companies. So it's really interesting as I Googled what's the percentage of people that are using real estate agents today. And it's actually 88% are using real estate agents today. And I got this statistic from Sharon Srivatsa, and he said back in 2001, it was 66%. So now more than ever, even with the options of iBuyers and cash buyers and the swipe and buy a home type platforms, 88% will still use a real estate agent. Let's go, top producers. So traditional real estate agents usage, 77% of sellers use traditional agents within the past 5 years. 76% of sellers would consider using a traditional agent for their next sale. I guess 1% of those were on the way out of the business. Satisfaction, 83% reported positive experience with traditional agents. 76% believed agent services were worth the commission, for sure. Performance, so 58% say it's the easiest way to sell a home, and 40% said it was the fastest. Only 5% considered it the worst way to sell. Only 5% we can live without you. Criticism, 36% believe that agents pressure sellers to accept low offers, or just being realistic. 12% report agents making mistakes during sales. And then the ulterior selling methods, discount brokers and flat fee MLS usage 3% of sellers use discount brokers and 2% use flat fee MLS services. That's pretty low percentage. Kind of ironic that it's 3% of sellers using discount brokers. Perception, 60% of sellers would give up some services to save on fees. Example would be open house or negotiation support. 71% believe discount brokers provide less marketing support. Performance is flat fee MLS listings have the longest average selling time. 38% of homes took over 2 months to sell. Well, no surprise there. And this data is really good to show. If you go to the show notes and use code TRE to be a BAMX member, definitely there's some really, really cool charts that we can bring up. The cash buyer companies. So the usage, only 5% of sellers used cash buyer companies, and the perception is 61% view those companies as scams. 38% rate them the worst selling method. Awesome. Uh, 65% of homes sold to cash buyer companies sold within a month. 31% sold without being listed. 54% of sellers did not take on optional expenses like repair or staging. This would be a good, really good blip to add to your listing presentation because this is all factual data from, let's see, Clever Real Estate. Thank you, Clever. iBuyers. So usage is 2% of sellers sold via to iBuyers. 8% consider iBuyers the least profitable way to sell. Buyers promise rapid offers, but viewed skeptically by most sellers. 49% would consider them. Let's talk about FSBOs. So usage is 10% of sellers use FSBOs. 46% sellers incorrectly believe FSBOs is the most profitable method. Now, 24% view FSBOs as the worst overall method. 51% believe FSBOs are the least expensive way to sell, but it's also the worst profitability, in my opinion. 66% of sellers say FSBO is the hardest way to sell. 55% say FSBOs are the slowest method. Seller priority. So 48% prioritize getting the highest price over ease or speed. 57% of sellers prefer a higher price, even if it means more effort. 24% prioritize a fast sale, and 20% focus on minimizing effort. You know, if you really think about it, most people will always want the aspirational pricing. I mean, let me know in the comments if you agree. It's they usually want a little bit more, or let's try this price. I know you're saying it's not worth it, but let's try it. Like, can I get a hell yeah if you've run into that issue? And it's, you know, statistically that's mainly what's happening in people looking to sell. Now, that's a really good conversational piece to prepare for with this data, to show that it isn't always the best. I mean, most people want this, but, you know, being that it could be their biggest asset, they may not get it. And then if they sit on the market too long, it affects their profitability. So market conditions, let's talk about 42% of surveyed sellers sold their home after late 2022 amongst rising interest rates. Nationwide, homes averaged 55 days on the market in September 2024. The profitability and cost to it. Sellers used traditional agents earned, here we go, $79,000 more in profit compared to FSBO sales. So this is a great piece when they start talking about your professional fees and what you charge. There you go. You want to make more money? Let's have this marketing plan and do great things. Nearly half of sellers, 44%, believe cash buyer companies offer the least profit. 69% believe traditional agents are the most expensive selling method. I think they just really haven't seen the numbers. So let's go into the unemployment. Now, unemployment highlights a decrease in seasonally adjusted claims to 213,000, and an insured unemployment rate increased 1.3% for the week ending in November 16th. Details trend include a rise in insured unemployment levels to the highest since 2021, and state-specific changes in claims. So we're going to go into each state and where they are in the unemployment rate, and this will affect, or it has an effect on interest rates. Higher the unemployment, the better the chance the interest rates will drop. Kind of morbid, but it's just the way it is. Seasonal adjusted data. So initial jobs claim the week of November 16th, 213 new unemployment claims were filed, which is 6,000 fewer than the week before. The number was revised from 219 to 217. 4-week moving average. The average in the past 4 weeks, 217,750, down by 3,750 from the week before. Insured unemployment week ending in November 9th, 1.91 million people are currently receiving unemployment benefits, which is 36,000 more than last week. So we see it going up. This is the highest number of claims since November 2021. 4-week moving average. The average is now 1.88 million, up by 5,000 from last week. There's also the highest average since November 2021. This is huge. This is really, really big news for those of you watching, that if unemployment rate goes up, there's a better chance that the federal government should cut rates, and that should affect consumer interest rates, which should move the needle to get offloaded a lot of this inventory. Unadjusted data, the initial jobs claim, 213,000 new jobs were filed, a drop of 17,750 from last week. Similarly adjusted predicted a smaller drop than that is better than expected. Insured unemployment, the rate stayed the same at 1.1, and insured unemployment, 1.67 million people are currently getting unemployed benefits. That's 21,000 more than last week. This is all showing the same thing, that unemployment, insured or uninsured, is all going up. Seasonally adjusted factors, smaller increase and higher than expected. Same time last year, 1.65 million were receiving benefits. So federal, civilian, and veteran claims, 615 claims from federal civilian workers, up 109. 408 claims by newly discharged veterans, up 26. Continued claims week ending November 2nd, 4,447 continued claims from federal workers, 4,388 continued claims from veterans, down 166. So why does this matter for real estate agents? Rising unemployment or increasing unemployment claims can give us insight on the local housing market. Higher unemployment could mean more renters or more people needing affordable housing options. If people are out of work, they may be looking to rent properties or get more affordable homes. Now, on the flip side, when there are people considering their jobs, they're more likely to buy, creating opportunities for you as the real estate agent to help clients when buying or renting needs. Keep an eye on these trends, because this is really, really going to affect where your inventory is going, what your sales price should be when you get your listings. And now let's go into the state-specific data, which is the last thing we'll cover, and then the 10-year where it is today. State-specific data, the states with the highest insured unemployment rates, it's going to be New Jersey, 2.2. Shout out to Ed Stulak. California is 2%, Puerto Rico 1.9, Washington 1.7, Alaska, Nevada, and Rhode Island 1.6, Massachusetts, New York 1.5, Illinois, Oregon, Pennsylvania at 1.4, and that's the highest insured unemployment rates. Large changes in initial claims, states with the largest increase: California over almost 6,000, New Jersey just over 2,500, New York 2,327, Minnesota 1,889, and Texas 1,275. The states with the largest decrease in unemployment is going to be Michigan. Interesting. 4,072. Then Kansas at 599. Wisconsin at negative 436. Ohio at a negative 305. And lastly, North Dakota at 284. Whew, it's a lot of unemployment. The 10-year Treasury, so let's pull that up. Nothing for Puerto Rico, brother. The 10-year is, it just ticked down. Before the show, it was at 4.4, and now it's at a 4.392. That's the 10-year Treasury, down 0.014%. Any questions you have, show them in the comments. Shout out to Beth in Hattiesburg, my favorite realtor there. Now the 30-year fixed is at 7.05%. It's slightly up 0.01. And the 30-year fixed weekly is at a 6.73, also up. But the prior year was at a 7.3. Can we bring that back up as we close out? Let's bring up the rates. So rates at the pivotal point it is right now, with all the positivity in the market, the Fed's toying with the idea of cutting the rates. It is lower than it was last year. So that's a great perspective to show your clients, to show your audience what's going on in this and where to track some good numbers with the unemployment rates. And I don't want anybody unemployed, but this is all positive outlooks on the housing market. Thank you, everybody, so much for watching the hot sheet and sticking around. I will be answering the comments. If you need anything, I'll leave that, and adios.